Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day, the last one for the week. It is June 8th. Today we are going to take a look at Abbott Laboratories. Let's jump right in and take a look at them. So if you want to know more about them, check them out, www.abbott.com, www.abbott.com. That is their homepage where I pulled this information from. Creating life-changing technology, from removing the regular pain of finger sticks as people manage their diabetes to connecting patients to doctors with real-time information monitoring their hearts, from easing chronic pain and movement disorders to testing half the world's blood donations to ensure a healthy supply. Our purpose is to make the world a better place, to bring life-changing health technologies to the people who need them. That's our commitment to helping you live your best life. In 1888, physician and drugstore proprietor Dr. Wallace C. Abbott began producing accurate, scientifically formulated medications with the goal of providing more effective therapies to patients and physicians providing their care. That's right, another one that's been around since the late 1800s here, just like we saw with Campbell yesterday. They have their hand in cardiovascular, diabetes, diagnostics, neuromodulation, nutrition, and pharmaceuticals. They also had the spinoff of AbbVie some years back now. So this one is one you may be aware of. I know a lot of dividend investors like this one. This would be similar to like a Medtronics here. And let's see why we were taking a look at them today. They were down 0.87% on the day. Not a huge drop, but a drop nonetheless. So I thought we would take a look at them. I do not believe we've done a video on them in the past. We are talking about Abbott Laboratories, ticker ABT, out of the healthcare sector. Closed out the day at $100.78. Looks like they're flat on the after hours, at least up to now. It's almost a little after 5 right now, actually, when I pulled this. 52-week range as low as $93.25, as high as $115.69. So they are closer to their 52-week low, though they have a little bit more to drop before they get there. You can see that downturn on the day today. Again, not a huge drop, but a drop nonetheless. Average volume 5.1 million. Today's was 4 million. Market cap of 175.251 billion. Large cap company here. A beta of 0.66. They are less volatile than the overall market. That's what beta means. It's the volatility of the market. 1 being the market, anything less than that being less volatile, anything more than that being more volatile. Price to earnings ratio, this is a bit elevated in my opinion. I don't know that Abbott Laboratories is growing fast enough to justify this PE ratio, price to earnings ratio of $30.26 per share. And what that basically means is you are paying $30.26 for every dollar of earnings this company makes, right? So you're paying $30 to get a buck. Not very good return there. Earnings per share, EPS, is $3.33 per share. Decent, but not great. Compared to some other companies, I would say it's good, but again, probably doesn't justify this high of a PE ratio here. Earnings date, July 18th through July 24th. That will be the next one, sometime in between there. Look for that. For dividend, $2.04 paid out on the year. They are a quarterly payer. We'll see that here in a little bit. Dividend yield is a bit lower than I like it, 1.98%. Not bad if it's growing, right? You want growing dividends over time, so we'll see that here in a little bit as well. This is a little lower than I like. Ex-dividend date was April 13th. Looks like they paid out May 15th, so you would be in line for the next dividend since they've already made that last payout if you were to buy them now. 1-year target estimate is $115.82, at least according to Yahoo Finance. So they see some potential upside appreciation. I am not affiliated with Yahoo Finance, just one of the sites I like to go to. Now, one of the other metrics I like to look at, we've already looked at the company overall, what they're about. I like to go in and look at dividend yield theory. You'd find that under statistics. Go down to dividend and splits. Look at their 5-year average dividend, 1.54. Compare it to their current, or over here what they call their forward dividend yield, both the same, 1.98, 1.98. And if it is higher, which it is, that speaks to some potential undervaluation according to dividend yield theory. So potentially undervalued. If this was lower than their 5-year average, then it would speak to overvaluation. But again, this one, according to dividend yield theory, is potentially undervalued. Payout ratio is decent, 58.36. Actually, it's below my criteria of 75% or low, so that gives them some room to continue to grow this dividend over time. And we'll see that dividend growth here in a little bit. We already went over the dividend date that they paid out in the ex-dividend date. And another one I like to look at under financials, if you were to go into financials, you'd find their balance sheet, you'd find their income statement. You would want to look at both of those and make sure that they have growing revenue, more assets than liabilities, their debt is under control, they're paying down debt, repurchasing shares, which you can see that here, they are repurchasing shares. You don't want them diluting you as a shareholder, but there's more information under this financials than just the free cash flow, which is what I like to look at. Dividends are paid out of free cash flow, so you want growing free cash flow over time. 2019, 4.4 billion. 2020 up to 5.7 billion. 2020 to 21 up to 8.6 billion. And then a little bit of a drop here from 2021 to 2022, 7.8 billion. But overall, from 2019 at 4.4 billion to 2022 at 7.8, they are growing their free cash flow over time. I don't mind one year blip here. Right, it would have been nice to see this nice steady growth, this to have been in the sixes, but I'm sure the CVD-19 had a little bit of impact here, may have driven this price up a little bit. But overall, like I said, from 2019 to 2020, they are growing over time. So growing free cash flow overall, and that's what you want, because you want to be able to grow the dividend over time. So you want the cash flow to grow and make sure that you can cover that dividend. They're well covered at 58.36%. So far, other than the price to earnings ratio being elevated and earnings per share not being as high as I would like to see it, metrics don't look too bad on this one. And now another source that I like to go to, I always recommend more than one source so that you can back check the information that you are getting is accurate. Sometimes sites don't update on the same frequency, so you want to make sure that the information you're getting is accurate. Stockanalysis.com is one that I like, along with Yahoo Finance, and they have had 23 stock analysts take a look at this. They call it a consensus buy. They have a low estimate of $104, and it is currently lower than their lowest estimate, so that would be a 3.2% increase in the stock price if it came up to their low estimate. Average estimate of $123.30. This is a little bit higher than what we saw for Yahoo Finance, but that would be a 22.35% increase in the stock price. A high estimate of $136, that would be a 34.98% increase in the stock price. All the while, you would be collecting that nearly 2% dividend yield. If it was to drop back further, obviously, that would be better. It looked like in after hours on this one, they're up slightly, 0.42%. So up a little bit in the after hours on this one here. Now, this gives you a lot of the same information that Yahoo Finance does under financials. Statistics, forecast is what we're looking at. Dividends, we'll look in here in a minute. Statistics, I like to go and look at ROE, return on equity, and ROIC, return on invested capital. And I like 10% or better, or in line with their competitors in their industry. So you might compare this to a Medtronics, like I mentioned before. Return on equity on this one is sitting at 15.80, above the 10% I like to see, and return on invested capital is sitting at 22.40%, and that is above the 10% I like to see there. So both of these are well in line with the return on equity and return on invested capital that I look for. And dividends, we want to make sure that they're growing their dividends over time. Now, this is where the information, you might want to back check this against one other source, because we saw it in the 50s from Yahoo Finance. This one is saying that their payout ratio is 62.01%. So this is a little conflicting information, and that's why I say you want at least two sources, if not three, to be able to back check this. You want to see which one is accurate. If you know and have another source that gives a payout ratio that matches either Yahoo Finance or stockanalysis.com, drop it in the comment section down below. But anyway, still under the 75% threshold that I look for. Dividend growth of 6.52%, decent dividend growth. You can see that growth over time, currently paying 51 cents per share. They are on the January, April, July, October timeframe, so one that pays out in January. That would be nice if you don't have any that pay out in January there. January, April, July, October. But overall, this one I would say is probably right around fair value in my opinion. 62% payout ratio, lower than what I look for. Dividend growth higher. Return on equity looks good. Return on invested capital looks good. Dividend yield theory says they're potentially undervalued. Growing free cash flow. So this is the type of company you're looking for and the metrics that you're looking for if you're interested in something in the healthcare sector. This one might be worth taking a deeper dive into and seeing if it's one to add to your portfolio. Personally, I'm a little heavy in the healthcare sector right now, so I'm not looking to add, but if I was, this one would be on the list. So that is Abbott Laboratories. Let me know what you think down in the comment section below. This is my investment criteria. You can pause it here. This is how I run through the videos as well. Understand the business, growing free cash flow last 5 years, growing dividend payout under 75%, check valuation based on dividend yield theory, buy below the current cost basis or within 15% of 52-week low, return on invested capital or return on equity greater or equal to or greater than the industry average, or 10% plus. And for financial companies, I like a price to book around 1 or lower, right? Must meet 4 of the 7 to even consider investing on it. If it is a financial company, must meet 5 of 8. Again, if you want to read through that more, you can go ahead and stop it here. Well, that is it for this one. Trying to find value in the market. Again, I like this one. I'd like it even more if it continued to pull back down into the 90s. They're closer to its 52-week low, $93 there, 95, maybe 98 or under, 96, somewhere in there would be where I'd look for this one if I wanted to add it. Again, probably around fair value right now. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. Join the vested interest community, trying to build a community of like-minded dividend growth investors. So join us along and help us share our experiences, share stocks we're watching, share stocks we're avoiding, mistakes we've made throughout the years, and things we've learned. That is what it's all about. We can help each other. I might not be able to benefit from your stock purchases and your dividends that are paid out, but I definitely can benefit from the experience you have learned over the years, and you can learn from mine. Even if it's mistakes we've made, go ahead and share those as well. I don't mind sharing the mistakes that I've made. That is what it's all about, trying to help each other out along the way in this journey, and that's what it is, a journey to financial freedom. I do personally read and respond to the comments. I'm always interested to read your questions and or opinions, so go ahead and drop them down below. If you have a stock you'd like me to cover in the Stock Pick of the Day series, drop it down there. I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. We'll see you in the next one. And don't forget to stop back by on Sunday. We will have the stock portfolio update video. It'll be everything that happened in my portfolio this week. So come on back and see that one. We'll see you. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing in for educational and entertainment purposes. Investing involves risk and kinship money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.